Hi everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan. On today's show, I wanted to recap on VAT. It's a topic that, as you can imagine, as a business accountant, we talk about all the time. And I think it's a good one. I feel like I talk about it all the time. And then when I look back, I was thinking I haven't actually talked about this recently at all. So let's get into it. Now, as you can imagine, working in the field we do as a business accountant, we talk about VAT all the time. And VAT is a weird one in that it's a tax that is actually very difficult. Even amongst accountants, VAT is like a specialism. So, like when you go to the doctors and you've got a problem, they'll send you to a specialist ear, nose and throat and nose. I don't know how you pronounce it, but yeah, like an ENT, that's it, an ENT specialist, or they'll send you to somebody who's good with kidneys or whatever. Like there's specialisms with tax. VAT is one of those quite frequently. But in our role as, I suppose, general practitioner accountants, we do an absolute load of this kind of stuff. And actually, I'm quite proud of our VAT department over the years. We've done a lot of different specialist things. So VAT can be one of those. And if you're looking for interesting tax news, weirdly, VAT is the kind of sexy one that always comes up. Like if I wanted to do a video that had probably the most views I'm going to get on a tax video, it's probably going to be a VAT one. I know a lot of people recently jumped on the one where they were talking about the VAT treatment of sandwiches and the sandwiches with the strawberries and cream in. That was a big VAT case. There's been ones where judges at a tax tribunal literally were dipping biscuits in tea to figure out whether they should be a tea biscuit or a cake or whatever the case may be. So these cases are quite fun, and maybe at some point I'll end up doing a podcast talking about some of those because they're one of those cool stories you can make yourself sound quite intelligent with or rather geeky at a party. So maybe I'll cover those. But for now, we're just going to recap the basics. So if you're in business now and you're not VAT registered, this is going to be great for you. If you're in business now and you're VAT registered, then there might be a couple of things out of this you might just get your mind thinking. I think particularly if you're on something like a flat rate scheme or something like that, we might talk and touch on a little bit of that as well. So let's talk about the basics then. So from an understanding point of view, as we said, VAT is a consumer tax. It's one of the most complicated ones, but it's a consumer tax. So it's paid by people at the end, if you like. So although us as small business owners, we basically, if we're VAT registered, we're unpaid tax collectors for the government. That's the best way to think about it, I think, because if you're in the chain in the right place, VAT sort of passes through us. It doesn't really cost us any money, as we're going to see in some of the examples. But as consumers, we spend it all the time. So if we go to the shop and we buy a TV, there's going to be VAT on there, most likely 20% of the time recording the podcasts, and it's buried in the price somewhere. Now, we don't care. We're paying 150 quid or whatever it is, but in there is going to be VAT. Actually, 150 quid would be a relatively cheap TV. But anyway, it'll be in there and we won't care. However, this tends to change psychologically, and I don't know what it is psychologically where this happens. Now, we deal with a lot of construction clients who have this problem all the time. And I remember frequently the discussions I have with clients when they're moving into being VAT registered as a tradie. And they're like, I go to someone's house and suddenly my bill's £1,000 and they're seeing the £200 VAT and crying about it. And I'm like, yeah, people do. Psychologically, it's really odd. They don't care about the fact it's in a TV, but they do care about paying it to the local tradesman because he has to charge it. And as we find out, you can see how this works in a minute. But it is a psychological problem and it can affect pricing. So we'll talk about that. But generally, it's on the same. Doesn't matter if you're buying a TV or the builder's charging you, wherever, it's on there. Now, there are different rates. So sometimes it's going to be 0 rated or there's no VAT on it. Or actually, you're dealing with a really small business that's not VAT registered. So not everything has VAT on it, or certainly maybe it has VAT, but it's technically 0%. And that sounds odd, but technically it's a different thing. So there's something known as 0 rated VAT. And it just means that technically it's VATable, but the government's decided not to charge you any percent of it. It's odd, but it's important for being able to reclaim VAT. So yeah, really odd one. Now, as always, in these type of podcasts, particularly where this is concerned, I think I've hopefully it's come across how complicated VAT can be, but I think the concepts aren't that difficult once someone's shown you and explained it to you. So the disclaimer in this is that with these things, it's going to be broad brush, top level, generic, usual scenarios. So if you're one of the accountants that's listening, I know there are a lot of you because it's a pleasure to talk to you when you come up and tell me you do listen. I know there's going to be things in here where you're going to be like, well, technically that's not true, but let's just keep it straightforward. I'm talking to you, the small business owner, where we're talking about this. So let's go through and talk about it. So as I said, it's this weird indirect tax where it's basically borne by consumers, which is us when we're going about our daily lives. Now, for that reason, I'm going to bounce around a bit here, but pricing can be a problem. We've just said psychologically it can hit people. So if I start with two generic scenarios where it's a good idea and not for your business. So if you're not VAT registered, generally, if you're dealing with the public, for the reasons we just said and the reasons I'm going to show you an example or tell you about in an example, I know on a podcast format, this could be quite hard to do. So I'll try and talk slowly, which is a problem for me. But generally, if you're dealing with the public, you're not going to want to be being VAT registered until you have to. Now, the reason I say have to is that here in the UK, we've got a crazy high VAT registration threshold. So in some countries, you go there, start a business, you're registered for their version of VAT instantly. Here, you can do £90,000 at the time of recording this podcast in a 12-month period before you have to be VAT registered. That's quite large, but it does create some problems. So it's really good if you're a tiny micro business until it's not okay. And then there's this massive cliff edge where sometimes your business can go from being okay to being untenable, just doesn't work because you suddenly can't charge any more money and I happen to pay VAT. And I'll show you, and you'll see this or hear this quite clearly in a moment. So generally public, you should think I'm probably going to want to wait until I have to be VAT registered. But as I said, caveat applies here. There are circumstances where that might not be true. And the adverse is true. If you're in business and you are working with businesses that are VAT registered, so say you're a business to business sale, and in actual fact, you're going with them, your customers are all those businesses, they're not going to care about the VAT that you're adding on to your bill. They're going to reclaim it. And I'll tell you about the mechanism for that in a minute. So it won't matter. So from a pricing point of view, actually, you're normally financially better off because you can recover all of the VAT you're incurring on your costs. And again, bear with me. I'll show you that in a minute. So those two scenarios, if you're dealing with the public, generally, you're not going to want to do it until you have to. Dealing with business to business, VAT registered businesses, and that's the important bit here, VAT registered businesses, because sometimes if you're dealing with, say, charities, or you're dealing with like micro startups who aren't themselves VAT registered, the VAT is the same problem as it is for a consumer. They're not going to be able to recover it normally. So bear those things in mind. But if you're in that business to business and they're clearly, VAT registered businesses you're dealing with, it can very often be a good idea to register from day one. You don't have to wait till you get to the 90,000 limit. So there we go. Then let's talk about some examples then of how it works. Let's talk about the TV. So use a TV example. We'll just call it £120. Let's just say it's a super cheap UK TV. Don't know if they'll be that cheap. Maybe there must be TVs for that price. I don't know. I haven't bought TV for ages, but let's just say £120. Now, let's say you're selling the TV as a business that's just started up and you've chosen that it's going to be £100. I know we were saying 120, but let's just say 100 to keep the maths simple to start with. You're charging 100. And the cost to make that TV. So if you just think about, I'm not going to go too complicated with what counts as a cost in this. Let's just say the actual, the box and the electric boards and everything else you're putting into it. Let's just say they cost you £60, okay? So £100 you're charging, costs you 60. So the profit per TV is £40. Again, forgetting then that you've probably got to pay marketing costs, rent, whatever. Just nice and simple example, £100 that you've brought in from your customer. There's no VAT involved with this from your customer point of view. You paid 60, you're making a profit of £40 per TV. Now, if we looked closely at the materials bill, though, if we pulled out the receipt, what we'd see is that you're buying it from a big chain, and that chain is actually charging you £50 and £10 VAT because they're VAT registered. They've had to charge you 20% VAT, and that's £10. So although it's costing you 60 at the moment, the actual business is only getting 50. That £10 they're taking and handing over to HMRC. And we'll talk about that in a minute. Now, if you had to go VAT registered or decided to go VAT registered, and then you went, do you know what? I still want to charge £100, but I now need to add 20% to my sales price. You're now selling your TV for 120 instead of 100. Now, if you do the maths on that one, the way it would work is you've charged 120. So you got 120 from your customer, £20 of that is not your money. You're putting it to one side and you're going to give it normally quarterly over to HM Revenue and Customs. And the way that works is you would do a VAT return. We'll talk about doing VAT returns in a minute. But you do a VAT return and you'd be handling that over to them each quarter. But before you do, you can deduct any VAT that is claimable under the tax law that you've incurred. So when we look at your little receipt we talked about with your £60 costs of your electronic boards and the box and things you bought, there's £10 of VAT on there. We said it's £50 plus £10 VAT to make the £60. So that £10 you'd knock off the £20 you're going to hand over. So it actually means, if you think about it on cash, you've had 120 in and you've had to pay 60. So you've got £60 there, but you only have to hand 10 over on your VAT return because, and again, this is where it becomes hard on a podcast to picture this, because you had £20 of that 120 is for the tax office, but £60 that you've paid out, £10 of that you can reclaim. So what you're left with is £50. So the way to think about it when you're pricing and you're VAT registered is you almost ignore VAT. That's how it's generally going to work with working out whether you made any profit. So if you think about it, your sale price is still £100. Your cost now is only £50 because you're reclaiming £10 of the £60 you paid. So you're actually making £50 per TV. Hopefully that's come across well on the podcast. So in that example, you're better off you're absolutely better off. You're making £10 more a TV. Sounds great. But as we already said, your TV in this scenario is now £120. And if the TV person down the road who's not VAT registered is charging 100 and it's for the same product, you're going to have a potential competitive problem. And of course, you can do all the things that we talk about quite frequently. Maybe you package it up, maybe you become a better brand, maybe you do all these things to make that higher price work. But let's just say in most generic circumstances, it's difficult. I think quite frequently where I see this a lot over the years is salons. If the salon down the road is charging 100 and you're 120, people do start to question it as a consumer. So you've really got to make sure there's a viable difference there. However, that's not normally what you would do, because we just said you've just increased your price by 20, but you're actually making £10 more than you were before. We were making £40 in our first example. So that's not normally how it would happen. How it would normally happen is you would only increase the price slightly. But before I show you and tell you about that example, let's just say though that actually, for whatever reason, you could not sell it for more than £100. You're like, it's got to stay at £100. What happens? Well, what would happen is the VAT has still got to come out of that £100. So maths aside, because I think people are going to go and times this by 20, you don't, just bear with me and just trust me on this one. The VAT on the £100 that is 1666. So you get to keep 83.33, because basically if you think about it, your price is 83.33 plus 20%, which is 1667 to make £100. So, and your cost is still 60, but obviously you can still recover that £10 VAT we're talking about. So what would actually happen is you've only charged 83.33 really, because the other 1666 is the tax officers, and you've spent 50 because you're recovering the £10. So you've made only £33.33 per TV. So your profit per TV has gone down. You've basically absorbed the VAT. Now that's painful, isn't it? You don't want to make less money. However, sometimes that's what some businesses do, but that's very rarely do they just not change the pricing at all. What tends to happen though, is if you just want to get back to your £40 profit, let's just do the maths backwards. What you'd actually need to do is charge £90. So because if you remember before you were charging £100, but your cost was £60. Now your cost is only £50 because you're reclaiming that £10 VAT. So you need to charge £90 plus VAT. So the maths of that, the way it would work is your sale price would be £108. So that's £90 plus 18 VAT, and your costs are 50. Which is your 60 less your £10 VAT. So you're back to making £40 per TV. Sell price 90, cost price 50. And that's really good. And your price has only gone up by £8. So again, you've got a couple of options there, a couple of different scenarios you can see. So it's not completely destructive to most businesses to be VAT registered when you do cross the threshold, but generally you do have to adjust some pricing or take a hit. Like if you physically cannot move that price, and I'd argue in most cases you probably can move the price, but there are some product businesses where it's not true, then you just start making less money per unit. It's unfortunate, but it's just the way that the world works, because you've benefited from not being VAT registered when all your other competition that's at scale is VAT registered. Now you're on the same playing field as them. And I actually do see this a lot with like e-commerce businesses where it seems to be making a little bit of money and then it makes no money because they have, being VAT registered destroys all of their margins and all of their profits. And there's nothing they can do about it because they're selling on Amazon or wherever, and everyone else is just as cheap and there's no real differentiation in terms of the product. So bear that in mind. So what I would say to people is if you're starting a business and you're hoping to scale it past 90,000, and I think most people would, otherwise they probably wouldn't get in business, then you've got to account for the fact of doing the maths of what happens to this business model if I go VAT registered, because it really does have a big challenge and a big change to your profits. Now, with those examples in mind, let's just talk about how mechanically this works then. So normally you do quarterly VAT returns, and as we say, you would get all of your £20 that you were collecting in the example where we're charging £120, all of your £20, knocking off all of your £10 and knocking off any other stuff. So if your accountant's charging you with VAT, your phone bill's got VAT, and all these other things that your business might be paying for. And again, I'm completely skipping over whether it's actually possible for you and whether you've got the right paperwork and whether you've got the right documents you need to claim the VAT, but let's just presume in a simple basis you have. Then whatever's left, the difference, you hand over quarterly. Now, you can choose to do monthly VAT returns and you can choose to do annual ones. I would never go near an annual scheme because it's a nightmare and it's not going to help you for various reasons. I'm not even going to go into the details. Don't do it, okay? If you do monthly, you need to be really, really on it. Now, I don't think there's any world where people who have to hand over VAT regularly will ever do monthly. I've never seen it, never recommended it, because there's no point, is there? If you think about it from a cash flow point of view, why do you want to have to part with cash every month where, it gives you a bit of flexibility of the ups and downs of business to do it once a quarter? But Where we do see people using monthly VAT returns is you can actually have a situation where you constantly get a repayment. So we said that there's sometimes you could have a zero rated thing. So if you sell something that's zero rated, there's no VAT charge, so you're not collecting any, but you are incurring it and you're well within your rights to reclaim it. So quite often you get a refund. Or if you're listening to this and you're in the construction industry, there's some real big rules that you'd have to learn separately to this called the domestic reverse charge. And it actually takes VAT out of the chain for a lot of people in the construction industry, which means you very frequently get refunds. And in that circumstance, of course, you want your money monthly. The biggest challenge with it, of course, is actually having your records complete and doing them monthly. So as accountants and bookkeepers, you imagine we do a lot of these and we do a lot in the construction industry. The biggest challenge for us on monthly returns is getting the paperwork from a client. Although we've got all the tech in place, it should be easy. People are busy. Owners are busy. I know I'm just as bad with my internal team when they ask me for stuff. I'm like, can you just wait? Like I'm trying to earn money here. So that's the biggest challenge. So if you are thinking of switching it to monthly, make sure you can actually do it monthly. That's the biggest thing there. But if you are in a situation where you're constantly getting refunds, then actually that can be a really, really good thing for you. So that is there. And again, that's the mechanism. And it's also known as making tax digital for VAT. So we've done other podcasts about this, and we'll definitely do more podcasts about making tax digital for income tax, where we're seeing sole traders at certain income levels having to submit 4 quarterly returns plus a year-end tax return. VAT, making tax digital is different. You just have to submit your VAT returns. They're just called in the same kind of umbrella with this idea that we keep digital records, we transmit digital tax returns. But it's the same idea there. They used to have a free tool that submitted HMRC VAT returns via HMRC's portal. They scrapped it all. Now you need software. So you have any paid software, something like Xero. Xero would always be my recommendation. If you go to heelanassociates.co.uk/Xero, if you're a new customer, you can sign up to a crazy good deal for, at the moment, it's, as the time recording, it's 6 months. So I think 95% off or something crazy, but depends where you listen to this, it could change. But at the minute, it's always going to be great. But at the minute, it's that. But if you didn't want Xero, or you're already in some other software, great. But if you were in a spreadsheet, you can do it, but you need something known as bridging software, where you've got to go and get another piece of software that goes over the top of it, basically, to transmit it. But I think if you're doing that, you should just investigate doing this properly. I think if you're at a VAT level, there's no reason on earth. You can argue with me all you like on this. I'll die on this hill. You need accounting software if you're VAT registered. There is no genuine reason why at your level you should not have it. So please go and do that. If you're thinking, yeah, but I like my spreadsheet, it's what I've always done, I can give you a handful of reasons why as you scale, that's going to be painful for you. So just bite the bullet, learn how to use the new software. There's tons of guides online these days. You can do it. You can absolutely do it. So making tax digital, you're going to need to do. And there is no free software generally. The biggest thing I think, though, with all of this with VAT, so you might think in that business to business scenario I was telling you about, that actually from day one, let's do it. Well, you've got to get software, although I'd argue software is good for you anyway. And then you have to submit these returns. Let's just say you've kept it normal every quarter. The biggest challenge actually is knowledge, though. It's understanding, as we said at the top, even accountants struggle with this sometimes, is understanding what's claimable and what's not. So that is probably the biggest barrier. Obviously, you can outsource this stuff, but if you're trying to keep it low overheads and low costs down, then that's going to be a challenge for you. So bear that challenge in mind. We've talked about refunds, and I did mention the flat rate scheme. So if you're VAT registered at the moment, there's something you're going to come up against, whether you're looking to VAT register or maybe you're already in it, and that's the flat rate scheme. Now, the flat rate scheme used to be amazing. It's really designed to keep your paperwork simple, because all you do is you work out what physically came in and times it by a percentage that the revenue tell you about and hand that amount over. It is easy. The problem with it is unless you sell a product, you're going to end up at a rate of 16.5%. Now, that sounds really good because you think, well, the standard VAT rate, Dan, you've told me is 20%. So handing over 16.5 is actually far cheaper. And I'm like, okay. But the way it works is it's 16.5% on the money coming in, whereas your 20% is on your sales price plus 20%. Now, it's very hard to show this on a podcast, but if you did the maths on that, you'll see you basically get to keep a tiny, tiny amount of the VAT that you're getting paid. And it's just horrendous. So it's very rare would I ever recommend that. If we went back over a decade ago, probably 50% of our clients were on it because it was that good with the percentages that they used to give and that easy that it would actually pay for our accountancy fee for a year. Surprisingly, the government decided that probably wasn't sustainable and actually they should change it because I suppose it was at the turn where more and more one-person consultants and those type of businesses were coming to the market and everybody went VAT registered because they were in that business-to-business scenario. You generally flat rate scheme. it was just amazing. And that was in the days where dividends up to the basic rate band, which is what is now 50k, were free. There was no tax on that either. It was, the memories. But anyway, that's gone. We are where we are. So flat rate scheme is very rare these days. In fact, I think we might have one client left on it. That's how bad it is for most business owners. So don't get basically baited by the maths on it. But in certain circumstances, it is okay. So again, usual caveat, there might be a scenario that you're in that it makes sense. So, but generally, yeah, people just, I see it online all the time. People are like, yeah, but there's 16.5. It's like, it's not though. It's not the same. You're comparing apples and oranges. So just have a look at that. So that's kind of, I suppose, the basics of where we are with VAT. So recap, and it's always difficult when I'm talking at speed on a podcast on this. So hopefully I've covered everything I wanted to cover. But what we have is we've got, if you're working with the public, absolutely think about considering not doing it until you need to. If you work in business to business, consider that it might be a good idea, but you do have Making Tax Digital to comply with and this knowledge potential issue and just admin of being VAT registered. Now, there are things along the side to this, I would say, though, is that if anyone who's been in business any time would probably look at another small business who's not VAT registered and realise that they're not doing a lot of money because they otherwise would have to be VAT registered. And I do think there is sometimes a commercial advantage to being VAT registered from that point because you don't want to appear too small sometimes, particularly if you're in a bartering, tendering sort of issue. People might think, well, hold on, if let's say it was a 20 grand job, they know that 20 grand is a substantial amount of your income. So yeah, just bear that in mind. Sometimes there can be a commercial reason to do it. And sometimes as well for practical reasons, you might have started an e-commerce business and realized it's easier with Amazon and you need to be VAT registered or something like that from day one, even though you're dealing with consumers. So there are other, like I say, there are outliers with this. But hopefully, that's a bit of a recap on how it works. And I would say if you're listening to this, the chances are we've just refreshed the video on YouTube with the worked examples I'm talking about on it. So if this has been too hard work, go to our main channel at Heelan Associates and there'll be a full video with me talking about all these things. You can see the podcast on the side YouTube channel, the HeelanHub one, but we won't be putting the example up on that one, I'm afraid. So, but yeah, visit the main channel and you'll be able to pick it up. Hope you've enjoyed the show. If you have, please do make sure to subscribe via your favourite app so you don't miss an episode. If you have 2 minutes, you can also review us on wherever you are. It helps the visibility massively, so thanks for that. For more business insight and tax tips direct to your inbox every couple of weeks, you can sign up to our HeelanHub Herald. If you go to heelanassociates.co.uk and just scroll up and down the screen for 2 seconds, a pop-up will appear that you can sign up to. And then we send all sorts of things there, some commentary from me, some links to blogs and tax tips and all sorts of stuff. So do sign up to that. We love our list there. That's fantastic. And if you do want to see more of these kind of things in video or just short form, of course, we're on TikTok, Instagram, YouTube, LinkedIn, everywhere, pretty much everywhere, Facebook, Twitter, wherever we're there, not Snapchat. You can, and of course, keep up with us on all those channels. As we mentioned, there's a discount for Xero at heelanassociates.co.uk/Xero for that cheap license. And if you want to get in touch about the podcast, you can do so at info@heelanassociates.co.uk. And we'd love to talk to you there. Those will make its way to me. That's it. Have a profitable and tax efficient week. And I'll see you in the next one.